Hey guys, it's James and we are back for another comparison video. We're comparing VOO versus VTI. VOO is Vanguard's S&P 500 ETF and VTI is their total stock market ETF. First, we'll check out their website pages, one for VOO and one for VTI. Then we'll take a look at how much these funds overlap. We'll also take a look at the Seeking Alpha data for their market price for both VOO and VTI. And then we'll come over to Portfolio Visualizer and then check out what an initial amount of $10,000 invested in both funds would have fared over the course of the past 10 to 12 years. And then I want to come back over to my calculator and see how these funds would look like 10 years in the future. Over on Vanguard's VOO web page, a few things I want to note here. Their expense ratio is 0.03. We'll use that in our calculation on our spreadsheet. The inception date for VOO was September 7th, 2010. Looking at their total returns, you can see since inception, their return with dividends reinvested is 15.08%. So every year invested in VOO, you should have expected close to a 15.08%, where a lot of the growth has come in the past 2 to 3 years. The 1 year return is 16%, 3 years 18, 5 years 15, and 10 year is 14.5. Over on Vanguard's VTI fund page, a few things we're going to look at, very similar to VOO. Their expense ratio is 0.03%. Their fund inception date was May 24th, 2001. And coming down to their performance or their total returns since inception, they are saying they have an 8.5% annualized return, with the 1 year, 3 year, 5 year, 10 year being 11, 17, 14, and 14. So if you look at just the fund history since inception, if we come back over to VOO's website page and look at their since inception annualized number, 15% per year on average. If we come back over to VTI, it looks like it would be a no-brainer to invest in VOO. As VTI, they claim their since inception annualized return is 8.5%, but that might not be the case. And as we go back to my spreadsheet, and we will see that these funds overlap each other and are very similar in their overall returns. Coming over to a comparison website, VTI versus VOO, 504 of the holdings overlap. 13.4% of VTI's 4,000 holdings are in VOO. 99.4% of their 511 holdings are in VTI, for a total weighted percent of 84% overlap. Coming over to Seeking Alpha's page for VOO, we see that their dividend yield is a 1.31% for their 12-month trailing yield, and their expense ratio is 0.03, paying a quarterly dividend. Coming over to the advanced section of their market data, we can see that their fund price started at around $100 in September of 2010, and you can see it has been pretty much consistently all uphill. If you recall, over on VOO's website, they claim about a 15% CAGR or 15% annual growth rate. Let's go over to VTI's Seeking Alpha page. So VTI's Seeking Alpha page claims a very similar dividend yield of 1.3% for VTI, expense ratio of 0.03 with a quarterly dividend. Coming over to their market price, we can see that the fund has a much longer history than VOO, and the reason for their low CAGR number of an 8.5 that we saw on Vanguard's website was because for the first pretty much 10 to 12 years of the fund, it was pretty much flat. So if you drew a line from 2001 to about 2011, the fund did not grow significantly compared to how it has grown in the past 10 to 11 years. So over the 20-year history of this fund, most of the growth has come in the past 5 to 10 years. So if you took the entire fund history, that would actually reduce the overall CAGR number to that 8.5% figure, which would artificially make VOO look like the much better fund to invest in. However, VTI, you might want to invest in VTI due to its lower share price. And if you wanted to sell or buy call options on it, that might be a little bit more favorable for you. And here in a moment, I'll show you what it would look like if you invested in VOO and VTI at the fund inception date of VOO. And you will see that VOO and VTI, from the inception date of VOO around September 2010, the funds almost tracked identical all the way to today. Over on Portfolio Visualizer, we'll go ahead and reinvest the dividends here, VOO versus VTI. And coming down here, you can see that these funds are exactly the same, even though VTI has the 4,000 holdings and VOO has the 511 holdings. If you take a look at reinvesting dividends, the CAGR number for VOO is 14.7 and the CAGR number for VTI is 14.47. So having those extra 3,500 funds, having those extra 3,500 stocks in the ETF for VTI does slightly pull down the CAGR number to about a 0.3 to 0.2% less value than VOO. However, we do see that the funds do track very similar. So what is the issue with VTI showing an 8.5% CAGR number compared to a 15% for VOO on the Vanguard website? Coming back over to the Seeking Alpha data, you can see that there was not that significant drop in 2008 as the fund did not even start until 2010. With VTI, you can see that drop. It looks like it was climbing up here, but then it dropped and it took a while for the fund to come back. So I would have suspected VOO would have performed something very similar to VTI if it was created before the 2008 crash. So to be able to get a good, accurate number for our calculator for VOO versus VTI for our spreadsheet, we're going to not reinvest dividends and see how the market price fared without reinvesting dividends and see what the CAGR number would be for both funds. Starting in September 2010, without reinvesting dividends, we can see we have, again, VTI and VOO tracking each other very similar, with VOO slightly outperforming VTI at a 12.52% versus a 12.38%, so a difference of 0.14% per year. Coming back over to the calculator with all of the information that we found from Seeking Alpha and the fund website pages, just doing a quick comparison with their dividend yields, expense ratios, with the CAGR numbers that we got from Portfolio Visualizer, and reinvesting the 1.3% dividend yields with a $10,000 investment, VOO again would slightly outperform VTI. And coming over to the income graph, you can see that they would be tracking each other very closely. And just in case you were curious, after 10 years, a $10,000 investment in VOO would have gotten you something close to this number, and a $10,000 investment VTI would have gotten you something close to this number. Head down in the comments, let me know what you thought of this comparison. Let me know if you want me to compare some other ETFs. And with that, thanks for watching.